So good afternoon. बस. So good afternoon. Today we are going to do the practice session of monetary policy in India. Okay. So today we are going to do monetary policy practice question. Okay. So first question that come in SSC examination. Okay. Wait for a second. Okay. Okay. The first question we have the Reserve Bank of India. The question came in 2023 SSC CGL examination. Okay. So the question is the Reserve Bank of India which which of the following tools to control liquidity in the financial system. Okay. So the question is asking that what money control tool RBI is using. Okay, so first that is fiscal deficit. Fiscal deficit is not the answer. Okay, what is the meaning of fiscal deficit? Fiscal deficit is total expenditure minus total income. Total income minus borrowing. Minus borrowing. So this is our fiscal deficit. Okay, total expenditure minus total income minus borrowing. So this is fiscal deficit. Now, second, that is capital account convertibility. Okay, capital account convertibility. This is not a this is not a monetary policy tool. Okay, it is a foreign exchange matter. It is the foreign exchange matter. Okay, it is the foreign exchange matter. Now we have cash reserve ratio. Yes, this is the answer. So the answer is number C, cash reserve ratio. So by using the cash reserve ratio, RBI control the liquidity in the market. Okay, revenue deficit meaning revenue deficit meaning revenue expenditure minus question is asking that which of the following is not a quantitative. Okay, focus this word, that is quantitative credit control, quantitative tool. Okay, we have two types of tool, that is qualitative and one is quantitative, right? So one is qualitative, one is quantitative. So it is asking the quantitative credit control measure of RBI. So, and which is not. Okay, this is the very important word, not. Here it is saying not. Which of this is not? So cash reserve ratio is the quantitative credit tool, right? Statutory liquidity ratio is also a credit control but quantitative credit control tool, right? Repo rate is also the tool. Repo rate is also the tool, but moral suasion is not the quantitative tool. Okay, so the right answer will be moral suasion. Okay, so answer is C. Okay, so right answer is C, and here right answer is wait a minute, right answer is C. Right. Next question. This question came in 2019. Okay, which of the full form of LAF? Okay, full form. So loan adjustment fund, we don't have these types of this policy. Liquidity adjustment facility, legal adjustment facility wrong, liquidity arrangement facility fund wrong. So this is the answer is liquidity adjustment facility. The answer is number B. Okay. Next question. This question came in CGL 2018. CGL 2018. Saying the which committee recommended the introduction of monetary policy committee. Okay. So which committee recommended the monetary policy committee in India? It is not the Narsiman committee. It is a banking sector reform. Okay, Raghurajam committee is not the answer. Chakravarti committee is not the answer. The right answer is Urjit Patel committee. Right? Now, the question which asked in CDS 2022. Okay, CDS exam is conducted by UPSC. Okay, so here it is saying the consider the following statement about the monetary policy committee. So this is the monetary policy committee question. Okay, so what monetary policy committee do? So first option is it decides the benchmark interest rate in India. It decides the benchmark interest rate in India. Yes, it is right. It decides the benchmark interest rate in India. Second, it has 6 members. Yes, it has 6 members, including the governor of RBI. Yes, including governor of RBI, we have total 6 members. So this question is also right. This option is also right. Third, that is the government nominate all the members of MPC. No. Okay, in this MPC, in this monetary policy committee, we have 6 members, 3 and 3. 3 that is the part of RBI, 3 members are a part of RBI, and 3 members are the part of governments. So here the option 3 is incorrect. 1 and 2 is correct. So the answer is option B. Number 6. Number 6. This is a question of CAPF. CAPF is examination is conducted by UPSC. Okay. Which of the following is described as a situation where inflation is high? Okay. In this situation, inflation is high, economic growth slow down, and unemployment remain steady high. This situation is known as stagflation. Remember this. This situation is called stagflation, when there is high inflation, okay, slow economic growth, and there is high unemployment. So this situation is known as stagflation. Okay, so this situation is known as stagflation. Next question. Next question we have. This question came in NDA 2020. NDA exam is conducted by UPSC. Okay. So the question is open market operation, OMO, open market operation of RBI. Now, what is the meaning of open market operation? So is it the buying and selling of shares? No, buying and selling of share is the work of share market. Okay. It is in the share market. Okay, buying and selling of foreign exchange? No, it is the exchange department. Okay, buying and selling of gold? No, it is not the work of RBI. So buying and selling of government security? Yes, this is the right answer. So option D is right option here. Okay, clear? Now going ahead. Number 8. This question is asked in 2019 CDS under the UPSC. Okay, the marginal standing facility MSF rate is always equal to the repo rate? No. Less than the repo rate? No. Higher than the repo rate? Yes. Higher than the repo rate. Equal to the reserve repo rate? No. Okay, so 8 numbers answer is higher than the repo rate. Okay, so the marginal standing facility rate is always higher than the repo rate. Okay, next question. BPSC. Okay, Bihar Public Service Commission. This question is asking 2021. Which policy is known as dear money policy? Dear money. Here, dear means high rate. Okay, dear means we can say महंगाई. Okay, dear. Okay, something which is costlier. Something which is costlier is known as dear. Something which is costlier, that is known as dear. So dear money policy. Okay, so dear money policy, expansionary monetary policy. What happens in expansionary monetary policy? In expansionary monetary policy, what we do? We see that there is lower interest rate. Okay, if there is lower interest rate, then people can take more and more loan. So loan will increase. When the loan will increase, so money supply will also increase. So money supply will also increase. Okay, so if interest rate is down, so people will take more and more loan and money supply will increase in market. It means it is not the costlier. It means here we can see that this is cheaper. This is cheaper. So this is not the answer. So expansionary monetary policy. Okay, so the correct answer is contractionary monetary policy. Contractionary monetary policy, what happens here? Here interest rate will increase. It means people can't take more loan. So there is decrease in money supply. So there is decrease in money supply because loan become more costlier. Got it? Fiscal policy is totally for budget. Okay, so there is no relation of fiscal policy with monetary policy, and credit rationing policy is also not the correct answer. So the correct answer is option number B. Okay, now next question. Okay, Madhya Pradesh PCS 2020. Okay, what does the bank rate mean? What is the meaning of bank rate? The rate at which bank lend to their prime customer? No, this is not the right answer. The rate at which RBI lend money to commercial bank for a long term? Yes, this is the right answer. Okay, be remember it. Be remember it that okay, wait for a minute. Let me change my color of the ink. Okay, okay. So look here that the rate at which RBI lend money to lend money to commercial bank for a long term. It is the bank rate meaning. The meaning of bank rate is this. Okay. So next option is the rate at which bank lend to each other in a money market. No, this is not the answer. This is internal bank system. The rate at which RBI buy foreign currency. No, this is not the answer. So the correct answer here is option number B. Option number B. Okay. Next, number 11. Question number 11. Okay. In question 11, SSC 2022. Which of the following directly affect the money supply in the economy? Which directly affect the money supply in the economy? Money supply in the economy. Okay. So personal income tax rate has no connection with money supply. Corporate tax rate has no connection with money supply, and custom duty has no relation with money supply. Money supply has a relation with cash reserve ratio. What is cash reserve ratio? the percentage of money that bank has to put with RBI. That is the cash reserve ratio. So here is answer is option number A. Number 12. Number 12. Okay. SSC CGL 2023 question. Which among the following is not, look here, focus this, not a function of Reserve Bank of India? So issuing of currency note. No, issuing of currency note is the function of RBI, right? Preparing union budget, it is not the function of RBI. Bankers to the bank, yes, RBI lend the bank and lenders of the last resort, yes, absolutely. After bank will go lastly to the RBI. So the correct answer here is option number B. Next, SSC CHSL 2022. The Reserve Bank of India was established in which year? Okay, 1947 when we got independence, 1950 when the constitution. So this is the Independence Day. This is the independence. Okay, 1950 is not the date. 1950 is the date where constitution was applied. Constitution applied in this date. 1949 is not the date, the constitution making day. It is the constitution made. Constitution was made on this day. So the answer is 1935. So the answer is, so here it is, answer is option number C, 1935. Next question is SSC CGL 2021. Okay, who is the regulatory authority for the banking system in India? For the banking system in India, no. SEBI is the Security Exchange Board of India. It is the Security Exchange Board of India. It watch on the share market. Okay, it is on the share market. Regulatory authority, RBI. So regulatory authority is with RBI. IRDI, it is the insurance. Finance Ministry is the ministry. Next, so correct answer is option number B. Next, SSC CPO 2020. Which of the following is known as the Bankers Bank? Bankers Bank. Okay, Bankers Bank. When any commercial bank need money, so will no. So RBI helps commercial bank. Okay, so Bankers Bank. So that is not State Bank of India. That is not NABARD. That is not Exim. That is Reserve Bank of India. So option is number B. Next question. SSC CGL 2022. If cash reserve ratio CRR is reduced by RBI. Okay, if CRR is reduced, it means bank can give more loan. If CRR reduced, so bank will give more loan. So people have more money. So there is money supply increase. Money supply increased. So what will be this impact? Increase in bank credit, decrease in bank credit, no impact on credit, increase in government expenditure. No, it is not the option. No impact on credit, no. Okay, no impact on credit, no. Decrease in bank credit, no. Loan is increasing, people taking more and more loan. This is not the answer. So the correct answer is option number A. So answer is option number A. Next, statutory liquidity ratio refers to the percentage of deposit that bank must maintain in which form? So it is cash with RBI, no. It is the cash reserve ratio. Gold and approved security, foreign exchange, no. Government bond, only, no. This is gold and approved security. Gold and approved security, option number B is correct. SSC MTS 2023. The rate at which commercial bank borrow money from RBI for short-term need, need. So this is the repo rate. Correct option is option A, repo rate. What is reverse repo rate? when RBI take money from commercial banks, so this is called reverse repo rate. This is right. Bank rate is for the long term, not is short term. It is for long term. Or MSM is marginal standing facility. So this is not the option. So the correct answer is option number A. CGL 2020. Reverse repo rate is always higher than repo rate? No, RBI will not give much interest. So higher than the repo rate? No. Lower than the repo rate? Yes. No. Equal to repo rate? Equal to bank rate? No. So option is option number B. And the last question is SSC CGL 2018. What happens when RBI increase SLR? When RBI increase SLR, so it means bank has less money to lend, less money to give loan. So money supply decreases. Okay, so credit supply decrease. Yes, the credit supply is decreased. Option is right. Credit supply increase? No, no effect on credit. Money supply increase. Okay, so credit supply decreases. So option number A. So thank you so much for being with me. So this was the most important 20 questions from monetary policy which I taught you before this class. Okay. So keep your revision in a track. Okay. In a track. Thank you so much for watching this. Thank you so much. Bye bye.